और मेरी बात सुनो अगर Randeep ji will just wait for a couple of minutes more, then we can start. So just 11.
Surely.
Yeah. म्यूट है नहीं तो I think we should start. More than 200 have joined and they will join in another 5-10 minutes. Am I audible and visible both?
Yes, Mr. Sati.
Yes, sir.
Your videos are okay? Okay. A very good morning to all of you from National Center for Financial Education. Respected Randeep sir, the Executive Director SEBI and the Chairman National Center for Financial Education. T. Venkashwara Rao Garu, the General Manager of IRDAI, who will be handling the session on good financial behavior to choose the right insurance product. And all the participants from representing the resource persons, the smart trainers of SEBI, the financial literacy centers in charges, the Center for Financial Literacy in charge, and so many other who are involved in the financial education provision in the country. So, we have got a very overwhelming response to all our webinars that we are doing. So already we have 250 participants who are online now. So once again, a very kind and warm welcome to all of you to this Financial Literacy Week that we are observing. This is the third edition of the Financial Literacy Week. We started in 2021. 2020 was the National Strategy for Financial Education. The second edition was launched, and from 21 we started this observing this week. And this is broadly in alignment with the strategic priorities of the National strategy for financial education. It also aligns with the Financial Literacy Week being observed by the Reserve Bank of India during this 13th to 17th of this week all over the country. So, but this year the theme is good financial behavior, your savior. And on that theme, you can see, if you have seen our program schedule for the next 4 days, all the sector regulators will be speaking you on their sector specific things, and which is such an encouraging. You can imagine, in spite of their busy schedule, all of them, even the executive director of IRDAI, the general manager, the whole time member of SEBI, they all will be with us in the coming days to interact and address us. So that shows how important it has become, this Financial Literacy Week. In fact, with every passing year, it is becoming increasingly more relevant and more special. So with this, there is also the quiz competition that we are holding. So all of you, you can inform your schools in your jurisdiction to participate in this. The registration is open. There also we have got very good response from the schools. So I would request all of you again to encourage your school in your areas to participate in national level quiz. We have fabulous prizes to be given. So with this, I don't want to stand between you and Chairman Randipji, and also the team Venkashwara Rao Garu, who will be handling this session today on insurance product, how you choose and how you can be a smart in choosing the right insurance product for you. Sir, over to you to launch this third edition of the Financial Literacy Week. Randip sir, over to you, sir.
Thank you, Mr. Dwivedi ji. A very good morning to you, to my colleague, Mr. Rao, to your team at NCFE, and to the dignitaries, the financial resource persons, and the trainers. First of all, a very good morning to one and all. On behalf of the entire team of NCFE, I welcome you all for this Financial Literacy Week 2023 on the theme of good financial behavior, your savior. As somebody rightly quoted, personal finance is 20% knowledge and 80% behavior. We've just witnessed the turbulent period of COVID-19, and this pandemic has rightly ensured that those who had good financial behavior have been saved by the turbulent times of pandemic. It is essential that for good financial behavior, an individual requires financial trinity. That includes financial inclusion, the financial literacy, and the consumer protection. Speaking for financial inclusion, the financial inclusion initiatives by the Government of India, such as Pradhan Mantri Jan Dhan Yojana, social security schemes like Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, etc., have increased the financial inclusion, as can be seen from RBI's FI index, from 43.4% in March 2017 to 56.4% in March 22. Yet we have a long way to go to cover the entire population. We are taking this initiative in order to popularize the financial literacy amongst the various citizens and the various people in the country, so that they are better aware, they are better educated, and they can undertake financial planning for the good of themselves and their family. When we talk about the financial literacy, we strongly believe that financial literacy and financial inclusions are two sides of the same coin. Just to give you an example, the data which the NCFE, in collaboration with all the financial sector regulators, they undertook a nationwide survey in 2018 about financial inclusion and financial literacy status in India. This survey was called the NFLIS Survey 2019, which showed that India as a country has about 75% of the population which is literate, but only 27% of the Indian adults are financial literate, meaning only 27% of the Indian adults understand the fundamentals of savings, investments, date, and budgeting. Very interestingly, the survey also found that the women literacy level is comparatively lower than the men, which means that women need more financial literacy initiatives. Another interesting thing that came out of this survey was the rural and urban disparity in the financial literacy levels, where the urban was significantly higher as compared to the rural areas. We are also looking at the geographical disparities when we look at the aspirational districts and the districts in the eastern and the central states, what we observed was that the financial literacy level is lowered in these places as compared to other regions. We also would like to kind of highlight that there are three subcomponents of the financial literacy, namely the financial knowledge, the financial behavior, and the financial attitude. 53% of the respondents got the target marks under the financial behavior, whereas 89 and 49% of the respondents have qualified the financial attitude and financial knowledge respectively. So this financial behavior is an important factor that we should focus on. We as Indians know money calculations, but we do not know how to make financial decisions regarding money matters. So it is essential that we spread this knowledge, educate the people, and then encourage them to take sound decisions. And this endeavor, which Mr. Satyajit and his team at NCFE has started, for the last 3 years, is a very great service to, the Indian financial sector regulators, to the Indian policy holders, or to the Indian financial people actually, who could gain out of these initiative and understand a little more as to how to plan their finances. Without wasting too much of your time, and not to stand between you and Mr. TV Rao, who's going to be talking about insurance, I would only recommend that kindly take time out and put as many questions as possible, clarify all your doubts, whatever you may have, because this will help, people gain more and more financial knowledge, financial literacy, which could help them in turn take good financial decisions. I would, just say that to promote this basic financial education and to create a fully aware and empowered India, we at NCFE do offer the basic awareness and education programs which are sector neutral. We cover across banking, insurance, pensions, as well as the security market. I know that the financial literacy will play a crucial role in making and creating awareness, good financial behavior, and NCFE, along with the support of financial sector regulators, would maximize the infusion of good financial behavior habits into every one of us. With that, I conclude my speech and wish each one of you a very successful and a bright financial future. Thank you so much.
Thank you, Randeep sir. Thank you so much for sparing your valuable time to inaugurate and launch the Financial Literacy Week 2023, which we are going to observe in the next 4 to 5 days. As you rightly said, the financial behavior score, when the financial literacy we measured, it takes into knowledge, behavior, and attitude. And when the attitude is more than 80%, the behavior part, the respondents scored only 52, 53%. So there's a lot of things need to be done. I think more efforts need to be done in the financial education domain, so that the financial education programs that we conduct, they translate into behavior outcome. So that is one of the result-oriented thing that we are measuring every 5 years. And to say that we are just observing this week for the financial literacy, it's not correct. We are just creating the visibility, and the efforts are on not only from NCFE, from all regulators, from other stakeholders who are a part of the national strategy. They all are doing their bit and efforts in promoting financial education in this country. So it is just not this 1 week, but in this 1 week, yes, we try to disseminate financial education messages in a very, very large scale by conducting various events and activities. So over to Rao sir. Rao sir is a general manager in the Insurance Regulatory Development Authority of India. He has more than 12 years of experience in this regulatory body. Before that, he was working in the Life Insurance Corporation. So who can be better than him to start the inaugural session today on sound financial behavior and how to choose a insurance product. Over to you, Rao sir.
Thank you, sir. Good morning to both of you and all the audience and the dignitaries from other regulators. I thank Sri Dwivedi ji and also Sri Randeep ji for giving me this opportunity. I have the intention of this session is to ensure that at least a minimum understanding of insurance across all lines of business is given to you, and also a little bit of introduction to regulatory aspects. Regulatory aspects also is given to you. Therefore, without wasting any further time, I would go to my presentation. Hope you can see this.
Yes, sir, we can see this.
Yes, sir. Rao, we can see.
Yeah, thank you. So this is the agenda. Basically, we'll start with the basics and go through various nuances about how to choose the product and basic understanding of various types of insurance and common pitfalls in selection and various beneficiary designations, what basic idea about protection regulations and basic idea about grievance redressal mechanism and ombuds mechanism. So this is the layout because it's going to be for 60 minutes. It's about 45 slides I have. I'll try to make justice. But because at the end of the session, we will have a small session for question answers. I will try to manage within the time. So this is basically in this where we are migrating to an autonomistic society where individuals are financially responsible for themselves and the social support is on the decline. Family is naturally gradually losing its meaning and relevance also. So everybody is supposed to take care of themselves in the about finances or the remedy searching for financial remedies for various financial risks. And the demographics, if you see, you can conclude that elderly people are growing and there is a lot of need for retirement because even where people are have pension plans, there is a shift from defined benefit to defined contribution plans. So because market risk is increasing, nobody is taking the market risk. Therefore, one has to be very careful about how to plan for retirement. This is a need which many of us in India are not able to recognize it. And even markets are deepening, capital markets are deepening, and financial markets are offering a very new and complex financial products. It's difficult for any person without financial knowledge to appreciate and understand and choose a financial product that suits his life stage. Against this background, the consumer naturally it is difficult to match the expectations, and in a small slot of point of sale where you buy, it is difficult to bundle all these learnings into that small period of interaction with either the insurer or intermediary to navigate through the discussion and understand and choose a product. So generally, the perception of the insurance is that most of us still think that it's a very tricky and long process, whereas people want a simple and quick to do solution. So there is a need for addressing their concerns and explaining cost benefit analysis. What happens in the case of the worst case scenario, and what is the cost you are actually paying for it. This kind of analysis needs to go into the discussion. And many insurers naturally, because they can't have all the products under this one, their menu, the menu card is inflexible. Therefore, a person wants certain coverages. They may not be available with one insurer or one line of business. So multiple policies may have to be taken for multiple benefits, and it has to be with one purchase. And distribution channels are many IRDA has introduced many distribution channels. They are becoming popular. Online offerings are being enhanced. Many people have resorted to distribution, online distribution channels. Even those who are physically interacting, also faceless, also they have online presence. So therefore, the customers need to understand the features and risks inherent in each financial products and understand and take an informed decision so that there is and this one reduced risk of mis-selling. So before we go into the deeper aspects, I want to introduce a minimum basic terminology of insurance. One is insurable interest. Take the case of life insurance. It is the interest in the continued existence of the life assured. So that is insurable interest. So therefore, basic this premise is that insurable interest should be there. Second one is indemnity. Indemnity is policy holder should be restored to the same financial position as where he started from. That means the cost, the loss should be made good, and the loss should be to the extent that is incurred, it not more than that. And third terminology is subrogation. Subrogation is the concept where insurance company has got a right to pursue recovery from a third party. Wherever, for example, for a particular loss, somebody else is also covering. So the insurance company can make their loss good by proceeding to against those third parties. Fourth terminology is contribution. Suppose multiple insurers are sharing the same loss, then they share in proportion to this one premium or the contribution they share. And for fifth terminology is proximate cause. Before there is a terminology called peril, which I will come to later in the next slide or so. Proximate cause is the direct and primary cause of the loss. For example, a catastrophe is there. That has actually caused the loss indirectly. So whether the catastrophe is covered or not is the question which has to be examined for settlement of a claim. Even for example, an accident happens, a fall is there, which results in a pneumonia. Pneumonia is not the disease, is the cause. It is the fall that has caused the pneumonia. So that is how we insurers evaluate the proximate cause. Then we have peril and risk. Peril is something, a specific cause of the potential loss. Don't worry about noting down. We are going to share this entire presentation. In fact, we'll make it more self-speaking and give it to you. Give it through NCFE. You can download it perhaps later on. Just please focus on the understanding the terminology. Peril is a specific cause of a potential loss, which means that fire or theft or natural disasters, hurricanes or earthquakes, which I mentioned. Whereas risk is the likelihood or probability of loss. So that is how peril has to be distinguished from the risk has to be distinguished from the peril. So both the perils and risk information is there with the insurance companies. So they calculate the probability and they arrive at the premium. And third basic information I have is information asymmetry. Information asymmetry meaning there is what do you call somebody is at a disadvantage. Asymmetry means symmetry is not there. For example, I am taking life insurance. I know about my health and my habits, my family history, my longevity of my parents or grandparents. All these potential risks I know better than the insured. Therefore, I am at a significant advantage compared to the insurer. Therefore, there can be adverse selection on my part. So, information asymmetry is something that insurers try to address by insisting on uberima fights. What is uberima fights? Utmost good faith. That means I have to be truthful and transparent about all the information which I disclose as part of the proposal. So nothing but truth should be disclosed as part of the proposal. And whatever I know in my knowledge, I think that is material for the purpose of life insurance or general insurance should be disclosed. And last terminology I want to introduce is portability. IRDAI has allowed portability as early as 2011. That is, it is specifically applicable for health insurance policies. One can port a policy from one insurer to another insurer. So whatever credit I have gained with the previous insurer for pre-existing conditions, normally these pre-existing conditions are not covered as part of health insurance initially for some period. So that waiting period, credit is given by the new insurer. So we are technologically also we are facilitating insurers to exchange the information from between insurers, so that insured is not at a disadvantage. Basically, it is insurers exchange the information and give them the credit. Now, having covered the basic terminology, I want to just talk a little bit about how to choose a right insurance product. Basically, we are covering financial risk in a life, in the entire lifespan of say 80 years or 100 years. We are in life insurance, let us say, we are covering various unfortunate events. Similarly, in the life stage of a general insurance, this one also insured object, you cover its life stages. Therefore, for the purpose of life insurance, I would say, let us say joint life policy, both the lives are covered. Children's education is covered. So, and similarly, when I reach family floater is a popular health insurance policy which any family can think of for health insurance. That is a health coverage, that is mediclaim is covered. And lastly, you have what do you call retirement, and which I mentioned in the initial few slides, that we fail to overlook or we fail to recognize the importance of preparing for our retirement. Therefore, some planning is required. For this, you need not accumulate entire money initially. You can just take an insurance, and during accumulation phase of retirement plan, you can cover the risk by life insurance, and as the fund grows, it pays for the annuity. So similar risk planning can be done. So basically, there is every insurer may not as you go through various options, there may not be default options. Suppose you are given a default option, it is easy to choose. But here default option may not be available, and you will have to design an option that suits you. For example, in each life circumstances are different. Somebody may think that I do not want pension, like my spouse does not need pension. I will suppose he is unmarried. He wants to have maximum pension for himself, and both of them want pension and also life insurance cover during accumulation phase. Then that is a different need. And similarly, health also can be covered together with the life insurance, or general insurance also can be covered life insurance as a combi products are there, where you can have both products covered as part of the offering. So you default option may not be there. So my point of communication is that you will have to design an option that suits your life stage. And generally, in the marketplace, the choices information presented are also not very simple and clear because of the terminology, insurance terminology, which may not be familiar to a common man. Therefore, you need to understand the terminology, little bit, spend time to understand the terminology. For example, risk cover is not covered, coverage is not understood. Human life value is nothing but a discounted value of the future earnings of a life insured person is human life value. There are, when you go to life insurers website, any life insurers website, you can see human life value calculators. So that is human life value. And lifelong guarantees are there. Guarantees are not easily available because insurers will have to actually provide funds for ensuring that the guaranteed sum is paid on the date of the sum assured falling due. Therefore, the guarantee products are there. And health insurance also, just because you are taking health insurance, that does not mean every medical service is covered. So you will have to be specific about what coverage you have and what it includes and what it excludes. This kind of proficiency should be there, and for this you need to spend little bit of time to evaluate the coverage, whatever coverage you are opting for. Naturally, based on the coverage, the cost varies. And as people grow, naturally the mortality or morbidity risk goes on increasing. Therefore, the premium also goes on increasing as with the policyholder's age. So cost also increases. And taxation is not the primary consideration, but you can maximize the tax benefits available by appropriately structuring the premium amount. So to continue with this choices of choosing the right insurance product, I want to draw your attention to various types of insurances available, like life insurance, health insurance, property. For example, home insurance is very popular, which many of the people don't take. At least for first 10 to 15 years, when a home loan is there, you need to cover the property against such risks also. So therefore, before you take a policy, you will have to browse through the insurance company's financial position, ensure that they can meet obligations. There is something called solvency ratio, which IRDAI insists. They need to be solvent, financially solvent. If you go to their public disclosures, you can see what is solvency ratio. Then access the right information. There is a classification of various products on each website. Our intermediary will have all the information with them. So what kind of information you need to ask for is something you will have to think through. Then take all the information that is required so that you can make an informed decision. Is it a single premium policy or a limited premium paying policy or a regular premium policy? And between when a single premium policy, regular premium policy is available, why I should take a single premium policy or limited paying premium policy? Whether really your earnings are limited for a period, so that limited payment premium option suits or aligns with your limited earning period of your life. That also, that kind of thought process should be there, so that you align the premium payment term with your earning period also. And personal, and each person will have their own personal and financial risks. So you will have to evaluate all those risks so that you align the coverage to suit those personal and financial risks. Lastly, I already mentioned about the how much of funds you will have to allocate. So you will have to take care of the long-term needs like retirement, and also retirement, long-term care. So accordingly, you will have to think of what premium I will pay. So continuing on this choice thing, so there is an obvious trade-off between cost and coverage. You can't have everything. So you will have to optimize between the coverages depending on how serious they are for in your perception for your life stage, and accordingly calculate the cost and appropriately structure the product, and pay for it. Don't be attracted by the offers, free offers, rebates, rewards, and all. You'll have to read carefully the policy, and you have to disclose all material information. If it is needed, you seek professional help also. And while you have insurance, it is not that you don't take care of the loss prevention. You have to ensure that you take appropriate measures to prevent the loss by being healthy. For example, in case of life insurance, in case of non-life also, you take appropriate risks so that risk coverages, risk mitigation mechanisms, so that it is not obviously exposed to the risk. So generally, there is something called point of sale. What is point of sale? Point of sale is the interaction you have with intermediary or the insurer, where you actually talk about whatever is required for the for purchase of insurance. So point of sale is where this is a interaction. You can say it is an interaction process. Here you have to ask whether there is a medical examination required, whether I am eligible for this policy, because after 50 some policies may be restricted, after 55 some may be restricted, after 60 or 70 some may be restricted. So see the age eligibility, see the medical examination eligibility, then satisfy yourself that you are undergoing whatever is required. Then policy details also, there is something called schedule in the policy, which details out the important terms and conditions of the policy, like sum assured, date of commencement, the premium paying term, the total term, this one, what do you call, the nominee's name. These are the important terms and conditions of the policy are put in a schedule. Please read the schedule. Then premium payment options also, monthly or quarterly or annually. There may be some fee associated with monthly or quarterly, because annual payment they may give some rebate of our rebate, meaning because obviously they are saving the cost, they will make it cheap. And there are riders also. Riders is, for example, critical illness rider is there, accident is a rider. So in addition to the basic coverage, you can get some additional benefit, additional coverages by paying little extra money. So accordingly, you have to think, ask for what policy riders are available, what is the maximum premium I can pay for the policy rider. And proposal form also, you have to see what are you disclosing about yourself, and what is the policy document. Effective date is something which is very important, which is in the schedule of the policy is issued, because section 45 dimension is there. In life insurance, after 3 years of your from the date of commencement of the policy, that is effective date, the insurer can always question the call the policy in question. What does it mean? Calling the policy in question means they can repudiate the liability. So after 3 years, insurers cannot repudiate any liability. So therefore, effective date is as per regulations. So therefore, effective date is something is very important. Similarly, cancellation renewal rights. Suppose a policy lapses, can I revive it? When I can revive it subject to what conditions, and whether medical examination is required for revival, and what other concessions and privileges are there, like am I entitled to pay premium within 30 days of, that is days of grace, and what other privileges are there, like loan is a privilege, whether loan can be given, can be obtained. Even in an annuity policy, for example, loan is available, you can take a loan. So broadly, this is the structure, industry structure. You have life, non-life, and lines of business. Under life, you have life insurance. Under health, you have personal accident, travel insurance, along with the traditional family floater or mediclaim. You have other life, agriculture insurance corporation, cattle, poultry. You know, Prime Minister's Fasal Bima Yojana, cattle and poultry insurance. Under property, you have mobile and mobile motor insurance, which is mandatory. You have, third party and immovable property insurance, and liability is the last one. So in life insurance, quickly, because in the interest of time, I would go a little faster. Please bear with me. Life insurance, you have only death coverage that is covered by term assurance. Only life cover is covered by pure endowment. It's like self-balancing portfolio. Life insurers have got a self-balancing portfolio, those who live and those who do not live. So any policy of life insurance can be thought as a combination of this term assurance and pure endowment. So life insurance sales process, I have jotted down some of the thoughts here. So financial calculator, which I already mentioned to you. Need analysis, something is a must. You have to evaluate your own needs. Many insurers are giving key feature document, KFD, which is a product total product information in a small one pager. Suitability about you, what is your objectives, and what kind of suitability information you need to evaluate for yourself is something is mandated by the regulations. And whatever purchase price, illustrative purchase price, everything they will have to be disclosed. Possible risks also be disclosed. Benefit illustration, insurers are mandated to give a benefit illustration. And all other regulators are there, like you have a KYC process where identity verification happens. You can pay premium online. And most importantly, in life insurance, you have free look cancellation, which is like you can, if you are not, if the policy you purchased is not the one you wanted, you are entitled to refund, provided you pay, you go and approach the insurer within 15 days or 30 days, as may be applicable to you. And many insurers are doing video verification to ensure that you understand the free look cancellation, your need analysis, and the suitability, all of the above stuff which I mentioned. and even claim procedure you should know. So in under life insurance, you have linked products and non-linked products. Linked products are essentially market-based products where investment risk is borne by the insured, that is policyholder. You have to be very, very careful about investment risk. Policy performance is something that can vary based on the market conditions. It's like any equity or a mutual fund product. Therefore, but on top of it, you have insurance cover here. You have death benefit. You have sum assured, which is mandated like this 5 or 7 times annual premium, or 125% of the single premium, depending on the type of the product. Generally, for all life insurance policies, suicide clause is applicable for 12 months. In non-linked products, maybe they will refund the premium, but linked products, there is restriction. Maturity benefit, you get the unit value. So discontinue. There is a facility to discontinue, like to take care of the discontinued policies. IRDAI has mandated that the money should be kept in a segregated fund. And even before lock-in, during lock-in, and after lock-in. Lock-in period is generally 5 years. You should know what is lock-in period. During lock-in period, you can't withdraw or you can't cancel the policy. So there are provisions which are applicable during lock-in period and after lock-in period. And partial lock-in or withdrawal is available only after lock-in period. Settlement options are there for 5 years. That is, you can defer the maturity amount. You need not receive the maturity amount in one go. You can spread it over 5 years. You have pension-linked products where the assured benefit is defined on death or also maturity also, on vesting also. Vesting is when the annuity commences. Surrender and commutation provisions, IRDAI has aligned these provisions with NPS so that commutation benefits are available in the life insurance linked policies also, or non-linked policies also. There is a concept of reduction in yield. There is a capping of the various charges. From regulatory point of view, we are capping various charges, like premium, all these charges I mentioned here. All these charges are capped in terms of reduction in yield, actuarial calculation. It's a mathematical calculation. Essentially, it is a difference between gross yield and net yield. So through this mechanism, we are trying to cap the various charges that are paid by the policyholders. And I talked about linked. When we have non-linked products also in the life insurance, you have participating and non-participating. Participating means which participates in the bonus evaluation of the insurer. Whatever profit is meant after policyholders get a share of the profits that insurer makes. That is participating. Participates in profits. That is the terminology. Non-participating is where guarantees are there. There is no bonus in non-participating products, but there is a guarantee. There are guarantees. So, like there also we have regulatory prescriptions. Minimum death benefit is there, which is 7 times, and annual premium 1.25 times single premium, or minimum is 105% of total premium. Suicide clause is applicable here to which I mentioned last time. 80% here is available during the first 12 months. Minimum policy term is 5 years for individual saving products. Premium paying term is minimum 5 years is there under non-linked products. See, whatever I mentioned to you in pension products, similar provisions are applicable here also. Like commutation provisions are aligned with the non-NPS, that is the National Pension Scheme. Health insurance sales process. These inputs are received from a ombudsman actually, based on various experiences of the ombudsman. Most important terms you have to read whenever you are taking a health insurance key feature document, and understand the criticality of the filling of the proposal form. Disclose all your hospitalization, consultations, tests carried out. All pre-existing diseases. PEDs means pre-existing diseases, suspected or cured, else claim may be repudiated. You should know what is your coverage, what are your exclusions for pre-existing diseases, what are the exclusions for medical procedures, whether porting is possible, when can I opt for the porting. All the related regulations they will explain to you. And whatever limits are there as part of the policy. For example, there can be a limit for disease, there can be a limit for procedure, how much you share the expenditure, is there any deductible, what is the maximum out of pocket expenses I have to bear. This kind of stuff you need to be need to understand, and you should know what is not covered, what is out of scope. And there is a network dimension also. For example, a network hospital may cover all the expenses, otherwise they may reimburse you. So you'll have to understand whether the network affects the access to the healthcare or not. And there is something called top up, whether there is a top up provision, like it is like excess of loss. Excess of loss can be covered by separate policy, and here also what do you call you can increase the sum assured by topping up also. So you know, daycare and domiciliary expenses, what is covered and what is not covered, you should understand. Pre-illness and post-surgery, pre-surgery and post-surgery also, whether any caps are there. What is the claim process? This is very important. So get visibility into each insurer will have their own specific claim process, and policyholder protection regulation generally standardizes the claim process, but still you need to understand what are the specifics of the claim process. Some claim reference, whenever there is a claim reference number. You will have to communicate with the claim reference number. Even our grievance portal, IRDAI grievance portal also facilitates registration using the claim reference number. So before we move into, we have covered life and health so far. Now we are moving to general insurance. So life is essentially long-term policies, and general insurance you have 1 year policies. Of course, slowly we are trying to introduce from regulatory point of view long-term policies like 5-year policies, but generally 1 year policies. And accident definition is unexpected, unsuspected, undesigned, undesired. So accident is completely out of this one. It is not what do you call initiated from the person. It is outside of the person. So that is accident. So this is general bifurcation of general insurance products, fire, marine, miscellaneous. So I just listed down for your understanding, easy understanding, what are popular general insurance products. From personal lines point of view, I already mentioned home insurance. It is also called dwelling or personal property. Auto, which I mentioned already, third party liability also I mentioned. For corporates, you have fire, marine cargo, engineering, liability. All these policies are sold to corporates. And there is a packaging. I already mentioned you inflexible menu card. So insurers are themselves are able to package various policies and selling package policies, so that in one go you get all the kinds of insurances. For example, for individuals, for a householders package policy is there. For shopkeepers, there is a package policy. For offices, there is a package policy. Even commercial entities, there is a package policy. So I have just jotted down what it covers, essentially what risks that are covered by householders package policy. Fire, burglary, damage, jewelry, loss of rent, and all liability also. So similarly, all other package policies also cover various risks that are what do you call, that are covered by as part of the package policies. I already mentioned to you, this is a householders package policy, shopkeepers, and office and commercial entity package policy. So you have various package policies, 4 types of package policies which you can sell to various segments of the population. Don't worry, we are sharing the presentation. No worries. We'll make it more self-speaking so that you can yourself browse through the presentation and understand. So this, I thought I will just detail out some common insurance pitfalls. Mis-selling. Mis-selling is what is a policy that is sold or that is taken does not align with what is your need. That is mis-selling. Lack of transparency, and clear and complete information is not communicated. Inadequate policy coverage, that is over insurance or under insurance. Unreasonable premiums. False or misleading information. It can happen both sides, from a policyholder or intermediary also. Lack of follow-up. It can also happen both sides. Customer may not be vigilant. Intermediary may not be vigilant, or insurer may not engage sufficiently. or insurer writes and policyholder may not respond, and failure to understand the claim process. So if you address these common pitfalls, you are more or less through. So what I have done is I went into our database. I have jotted down some of the popular complaint descriptions. So tampering, corrections, forgery, these are allegations by the policyholders that proposal is tampered. Hidden charges are not explained. Policy bond is not received. Some mistake is there in the schedule. Eligibility for surrender value or a claim value exclusion are there, or I am eligible for lesser amount. Single premium policy is issued. Mostly this is a big complaint, mis-selling. Single premium policy is issued as annual premium policy. In case of group insurance, certificate of insurance is not received. Even normal policy bond also sometimes is not received. And what the product I wanted is not the one which I received. Irrelevant claim documents. Because mandatorily the insurers can obtain some claim requirements, but in the name of obtaining requirements, some other irrelevant document is asked. Insurer policyholder is protesting. That kind of complaints are there. Claim repudiated without giving reasons. Insurers are required to give reasons and even explain why they are repudiating. Insurer repudiated due to some pre-existing clause exclusion. Non-acceptance of health cards by network hospital. So they are insisting on reimbursement, not cashless. Refusal to renew health insurance. There are some insurers is refusing karke. Some complaints are there. Scope of cover not explained. Portability denied. So these are complaints. So you have to understand your insurer or practices of the insurer with whom you are going, and take an informed decision. So having taken the policy, is it the end of the life? No, that is not the end of the life. You have to monitor your policy regularly. An account statement. You have to evaluate how it is performing and how your policy is doing well or not. And you may be migrating from one life stage to another life stage. Therefore, your insurance needs may go up. Your insurance needs may vary also from the one you have taken. Therefore, you will have to take a different kind of insurance at a different life stage. So you have to keep track of the policy and review yourself. And generally, whenever there is a lapse or there is so an insurer sends a renewal notice. Whenever a money back installment is there or premium due is there, they send a notice. You will have to carefully respond. Otherwise, if you don't respond within that grace period, there is a risk that you may have to go for medical examination sometimes, particularly post-COVID period. So bonus also they notify. So you understand how the bonus is being declared, how much of reasonable expectation can be there in an insurance policy, having regard to the previous bonus track record and value of ULIP policies. Whether any other information which has got bearing on the servicing of insurance policy, for example, place of business, they may change from the place of business. They may start a different service, or they may offer some other service which you have not factored earlier. So all kinds of communications are there. You have KYC, and your contact details should be updated. Bank account information should be updated. A lot of money is lying in unclaimed deposits. We see from a regulator point of view. Therefore, it is recommended that each policyholder keeps a portal account with the insurer and updates all his bank account information, contact details. So whenever there is an engagement from the insurer point of view, actively respond and ensure that the contact number is updated in the insurer's record so that they are in touch with you. We are coming to the end of the presentation, last few slides. I just wanted to draw your attention to various beneficiary designations. So nomination assignment. What is nomination? Nomination is you are nominating somebody to receive the policy benefits in the event of death. So it can be changed at any point of time. So there can be no dispute. It gives a good discharge to the insurer also to give the claim value to the nominee. And Section 38 is of Insurance Act deals with assignment of the policy. For example, you take a loan or you pledge you pledge the policy as a collateral security for a home loan. So that policy is assigned. So only to the extent of that loan, the insurer will have right over the policy. Rest of the money they are under duty to pay the policyholder. So, but theoretically, it is a kind of a transfer of property mechanism, which is facilitated by the Insurance Act. So, policyholder retains the right to make changes to the policy, and he can revoke the assignment and he can surrender the policy and all. So, these are special mechanisms which one should know. I just wanted to draw your attention to the will also, in addition to the nomination assignment. A will, it helps to have a will under the Indian Succession Act. Probate is a word which one must know because the validity of the will is established through a probate. So these two are the minimum terminology which everybody should know as you are making some financial planning for yourself. And lastly, from regulation point of view, there are various regulations surrounding various products and various distribution mechanisms. And so I already talked about treating customer fairly kind of suitability regulation, which we have in place for life insurers or non-life insurers. There is a market conduct circular issued on 26 September 2019 for life insurers. Similarly, for non-life insurers, we have a different guideline. Therefore, in addition to all those product-specific and distribution-specific guidelines, we have a generic policyholder protection regulations, which generally talks about fair treatment of policyholders. Insurers should have a policy to address their grievances and to ensure that they have systems in place to be alive to the what policyholder wants. It talks about what happens at the point of sale. Regulation, for example, it talks about proposal. Regulation 8 talks about proposal for insurance. Regulation 9 talks about matters to be stated in life insurance policy. Please refer to policyholder protection regulation. Anyway, when I share the slides, I will incorporate the links. There is a free look cancellation facilitated through policyholder protection regulations by way of regulation number 10. Matters to be stated in general insurance policy also, regulation number 11. Matters to be stated in health insurance policy, regulation number 12. And general principles regarding governing issue of general and health insurance policies, regulation 13. 14, 15, 16 generally talk about claim settlement. Because of this claim settlement, I wanted to see these regulations. Claim procedure is very much detailed in regulation 14 for life, for 15 for non-life, and 16 for health insurance policy. Pre-look covered, which I already mentioned in regulation number 10. So broadly, these regulations are there, and these are hard coded. So generally, they follow. We monitor through our inspection, supervision mechanisms, and on-site and off-site mechanisms. We monitor this adherence to these policyholder protection regulations. So, as part of, in addition to policyholder protection regulations, we have issued several circulars to engage the policyholders, and from time to time, which I mentioned earlier. And this is a policy, I wanted to draw your attention to this particular thing, particularly in health insurance policy, some basic information that needs to be disclosed is there, which I already have covered as part of previous presentations, but just I wanted to bring your attention to this. Particularly in the event of a claim, they should communicate the balance of sum assured cumulative bonus available to the policyholder. This should be notified within 15 days of settlement of claim. This we have mandated through a circular. So we are coming to the last few slides. Now I will talk about the grievance redressal mechanism or ombuds mechanism and what we are doing in consumer protection area. This is a portal which we have it's a bimabarosa.irdai.gov.in. You can go and register your complaint. You can even track your complaint through this portal. So you have visibility into how your policy, your grievance is being addressed by the insurer, and you have the GRO number, GRO email ID, GRO direct number you have when you register the complaint. You can directly reach out to the grievance redressal officer of the insurer and sort out your problems, and we facilitate it. We also monitor escalated grievances. Like these are the basic workflows. Wherever there is an escalation, a resolution is not to the satisfaction of the policyholder. Policyholder can escalate. Wherever it is beyond TAT also, it gets escalated. TAT, we have 3 days for acknowledgement and 15 days for resolution. Suppose they don't adhere to those time limits, it automatically gets escalated. So all the escalated grievances, we take a review with the insurers from time to time and we monitor. So this is a diagrammatic representation of our grievance redressal mechanism. We have a call center, and one can send an email to us. We can send a scan, a copy, or even letter. We get it scanned and send it to our call center. Call center registers. It is integrated with all insurers in real time. So we get visibility into how they are the grievance goes in real time to insurance provider, and policyholder gets a token number. Using token number, he can monitor. We can also monitor how a grievance is being resolved. Policyholder gets status updates from time to time, be it acknowledgement or be it resolved or escalated. He gets SMS. That is about grievance redressal mechanism. Now we move on to ombudsman mechanism. So suppose grievances are not resolved, what is the remedy for the policyholder? They can go to the ombudsman. It's a quasi-judicial authority, cost-effective, fair and transparent one. It's a time-bound, this one is a cheap mechanism, and very simple and speedy also. So basically it is positioned as an alternative to the traditional court system. So one can register life, non-life, health and motor insurance complaints. The ombudsman can act as a counselor or mediator also, provided there is a written consensus. Usually up to 30 lakhs claims can be awarded by the ombudsman. Orders should be complied within 60 days. IRDAI has issued a separate circular that they have to comply with the orders of the ombudsman within 60 days. We review wherever the awards are not complied, whether they are contested in higher courts or whatever. We review all such awards which are not complied within 60 days. And appeal also should be preferred within the stipulated time. So this is the website. Anybody can go to ombudsman directly online and register cioins/complaint.online. This is the screenshot of the complaint registration. So all these various types of complaints I have again jotted down from the ombudsman rules, be it settlement delay or repudiation of claim, you have a dispute or misrepresentation, you have some problem with legal construction of the policy, even servicing related, issuance related, non-issuance related, even any other violations of regulations or Insurance Act provisions or IRDAI Act provisions, one can go to ombudsman. So there is a mediation also mechanism. So in mediation mechanism, ombudsman typically recommends, and that recommends is when it is acceptable, then he communicates within 15 days. Okay, it has to, the policyholder has to communicate within 15 days. Then we can say ombudsman can send it to insurer, and they will also comply within 15 days. So it's a very fast mechanism, simple and fast mechanism to address the grievances. So this is about regular awards. Suppose it is not mediation, it has gone into award stage. Then there is a hearing given by the ombudsman, and he gives awards. And awards are binding on the insurer generally, unless they contest it in higher courts. So this is basically the industry structure. You have insurers, intermediaries, other intermediaries, regulatory bodies, educational institutions. We have National Insurance Academy, IARM, IIB, or industry database, data center kind of organization. We have visibility into transaction level information also. So the conclusion is one has to be very careful about what is the coverage. He has to evaluate the suitability information, and he has to obtain the benefit illustration in writing from the intermediary or the insurer, and be alive to the policyholder protection regulations. Avail the free look cancellation if required. Attend the video call or whatever call, the validation call that is made by the the insurer. Validate your understanding of the coverage and various riders and options, exclusions, all whatever. Even if you have a grievance redressal, you go to this our website, and you can register our complaints also. What do you call, by writing an email to us? You can approach Ombudsman. So this is what I wanted to share. If you have any questions, I am open.
Okay, thank you, sir, for your enlightened talk. Now, the participants, if you have any question, you can type in the chat box, unmute me. We will unmute you, then you can ask your question. Or you can raise your hand. So we will unmute you if you have any question.
Yeah. Looks like there are no questions, or people have too much of content.
Hello.
Yeah.
Sir, myself Sanjeev Nigam from Allahabad location.
Yeah.
Sir, I have made a complaint in insurance ombudsman on behalf of the one of the aggrieved person for an motor vehicle claim. I just make a multiple reminder, but I didn't get any response from their side. I just also make one of the written complaint in writing and post it by post as well. They have issued one of the complaint number, but ultimately there is no turn up over there, sir, and no contact number is available to response there कि वो हमसे बात कर सकें. ऐसे मामले में क्या करना चाहिए? I know that one of the agree person who is suffering that over the motor claims, that the ICICI Lombard Life General Insurance Company, his car has been just damaged, and the value becomes the zero, and the claim has been rejected by the general insurance company.
Yeah.
And the claim is totally genuine. The person is fighting since last 3 years. Sir.
Yeah. So actually, you can raise a complaint in Bima Bharosa, and you can copy us.
Yes,
So all our emails are in the public domain. You you please write to us. We will definitely do whatever we can do.
So I have already been written down. Can I make it a reminder? Yeah, Anusmara.
Yeah, please.
Reminder 1, reminder 2.
Yeah, sure.
Sure, sir. If someone is not
interactive, IRDAI.gov.in is monitored by us. You can write to complaints at IRDAI.gov.in, and specific refer to this session. Please.
Sir, I have made a complaint to the IRDA. IRDA told that we have to forward your complaint to the ICICI Lombard, and they will entertain over there.
Yeah, sure, we will do it.
Sir, ultimately, the complaint
kindly explain AP, SP, and TP. AP is annual premium, SP is single premium, TP is the total premium. In non-linked products, sum assured, the minimum death benefit should be 105% of the total premium, and 5 to 7 times the premium.
Sir, hello.
Yeah.
Sir, my question is related with the general insurance, where the ICC
You
Lombard.
mentioned about the complaint, no?
Okay, sir. Sure, sir.
Yeah, please complain. We will look into it.
Okay, sure, sir.
You have our personal email IDs also on the website. You can write to us if there is some concern that you.
My concern is that, sir. Hello.
Yeah.
My one concern is that all the complaints has been redirected to the insurance company rather than the ombudsman. I am writing
First,
to the ombudsman as well as.
yeah. I want to clarify here. First port of call should be insurer. You have to first write to insurer, exhaust the opportunity with the insurer. Then you have to go to the ombudsman. Or I think the best mechanism is you write on Bima Bharosa, go to directly Bima Bharosa and ask the complainant to register the complaint. It automatically syncs up with the insurer. We also have visibility into the complaint.
Sure, sir.
If he's not happy, let him escalate. Automatically, it will
Ombudsman
draw
escalating is
attention
not
to this kind of
satisfactory
complaints.
at our end, sir. Okay, sir. I will look after for the Bima Bharosa, but the mechanism of an ombudsman is not looking on a very attractive and effective, sir.
Okay, yeah, please register and Bima Bharosa. We'll do our best.
Sure, sir. Thank you, sir.
Okay, sir. We didn't receive any other request on the chat box. So I think we should wind up the session. So thank you, sir. And thank you all the participants. So first of all, I would like to take this opportunity to express my sincere thanks to each and every one of you for your active participation in this capacity building program. I would like to thank Mr. Rao sir also for sharing his valuable insights on the importance and value of insurance in our life. Sir has covered almost all the aspects of insurance, whether it is related to health insurance, life insurance, or any other type of insurance. And definitely it will help us to make informed decision to choose right insurance product. Finally, I would also like to thank all my teammates who have put their hard work to make this event, run smoothly. And I'm very grateful for their efforts, dedication, and commitment. So before winding up today's session, as you all know, we are conducting a series of capacity building program during this financial literacy week. And today is the first capacity building program, and tomorrow we have the second capacity building program on the topic of good financial behavior for better credit score, where RBI official would be the speaker. And I'm sure you will attend tomorrow's session also with the same energy level which you have shown in the today's session. And I would like to request to all of you to join all the sessions, 5 minutes prior to the session timing. Means the session timing is 11 o'clock. So kindly join on or before 10:55 a.m. so that we can start the session on time. So now I pause my word, and once again, thank you so much. And I'm sure tomorrow we will meet again. Thank you.